Right now, as you watch this, oil just went absolutely nuclear. WTI crude surged 8.5% in a single session, and Brent crude punched through $85 a barrel. Gold futures are sitting just below $5,084 per ounce. Silver shot all the way up to $85.73 before pulling back. And the Dow Jones just lost nearly 800 points in one day. A choke point in the Persian Gulf that controls 20% of the world's entire oil supply is under serious threat right now. And if that doesn't make your heart rate go up just a little bit, it should. Welcome back to Silver Signals. I'm your host, Yali Jiang. And if you're new here, welcome. You picked an absolutely wild day to find this channel. Today is March 5th, 2026, and the markets opened this morning in full-on crisis mode. We are going to break down everything, the oil explosion, what the Strait of Hormuz situation actually means for your money, why gold is at record levels, why silver is behaving like a coiled spring, and most importantly, what any of this means for you as an investor. Before we dive in, if you haven't subscribed yet, I genuinely ask you to do that right now. Not because of some algorithm, but because on days like today, when things are moving this fast, you do not want to miss the follow-up videos I'll be dropping. Let's start with oil, because that is the match that lit everything on fire today. WTI crude, that's West Texas Intermediate. The US benchmark jumped 8.5% to over $81 per barrel in a single trading session. An 8.5% move in crude oil in one day is enormous. That's not a normal market fluctuation, that is a signal. And Brent crude, the global benchmark, climbed 4.93% to $85.41 per barrel. So what's driving this? Two words: Strait of Hormuz, a narrow waterway between Iran and Oman that is the jugular vein of the global oil market, through which 20% of all the oil that moves anywhere in the world must pass. 20% of global oil flows through a passage that, at its narrowest point, is only about 33 kilometers wide. 1 in 5 barrels of oil on the entire planet passes through there. Tankers have been attacked in the Persian Gulf. There are credible fears of a full blockade, and the market is responding the way any rational system would respond when a critical artery is threatened, with panic and a massive price spike. This is not background noise. This is the kind of event that reshapes energy markets for months, and every investor on the planet should be paying close attention right now. But here's where it gets even more complicated, and this is something most of the mainstream financial media isn't spending enough time on. Iraq, one of OPEC's largest producers, has reduced its output by 1.5 million barrels per day. That is not a small number. That is a supply shock layered on top of a transportation crisis. And there are credible reports that the UAE and Kuwait may be facing similar issues with potential for further cuts due to transport disruptions, tied directly to the same regional tensions. So you have supply being cut from the production side and the delivery route being threatened at the same time. This is the kind of perfect storm that energy traders spend their whole careers preparing for. And most of them are looking at their screens this morning with wide eyes. The question you should be asking isn't just, why did oil spike today? The real question is, how long can this last? What are the second-order effects on everything else you own? Your stocks, your savings, your cost of living. That is what we are going to answer right now, piece by piece, starting with the precious metals market. I want to pause here for a second and genuinely ask you something, because I'm really curious what you think. Drop a comment below right now. Do you think this Strait of Hormuz situation is going to escalate further? Or do you think we're going to see a diplomatic resolution that calms the markets down in the next few weeks? I read every single comment on this channel, and your perspective matters, especially from our international viewers who are based in regions that are going to feel the effects of this before the rest of the world does. Tell me what you're seeing on the ground, and let's have that real conversation together. Now, let's talk about what this oil crisis did to gold and silver, because this is where things get really fascinating for precious metals investors. Gold futures. For April 2026, we're trading near $5,084 per ounce, and that number deserves a moment to sink in. Gold has been on an extraordinary run, but what we're seeing today isn't just a continuation of a trend. This is safe haven demand being turbocharged by a geopolitical crisis happening in real time. When global investors get genuinely scared, not just nervous, but truly scared, they do not run to stocks, they do not run to crypto, they run to gold, and they have done this for 5,000 years, and they are doing it again today. The math here is actually pretty simple. Oil goes up means energy costs go up. Energy costs going up means inflation goes up. And inflation going up means the purchasing power of every dollar, every euro, every yuan in your wallet goes down. When the value of paper money is under threat, gold becomes the ultimate insurance policy. That's not a theory. That is what you are watching play out on your screen in real time on March 5th, 2026. Central banks can talk and governments can issue statements, but when the supply lines of the global economy are under threat, gold speaks the only language that never loses its meaning. Silver, however, is a completely different and far more volatile story today. Silver tested highs of $85.73 before retreating, with spot prices pulling back to around $82.46. And here is why that matters. Silver plays two roles simultaneously. And this is the key insight that most casual investors completely miss. Silver is a safe haven asset, just like gold, but silver is also an industrial metal that goes into solar panels, electronics, electric vehicles, medical devices, and semiconductors. So when you have a geopolitical crisis threatening oil supply, you also have a global industrial picture that starts to look murkier. High energy costs squeeze manufacturers, they slow production, and that creates real uncertainty about how much silver industry is going to consume. So you get this fascinating tug-of-war playing out in real time. The safe haven buyer pushing silver up, and the industrial demand uncertainty pulling it back down. Add to that the fact that high energy costs make silver mining more expensive, and you've got a pressure cooker of factors all acting on the silver price simultaneously. That volatility, that $85.73 high followed by a retreat to $82 is not random noise. That is the market trying to figure out which version of silver it's looking at right now, the monetary metal or the industrial commodity. And the answer, as always with silver, is both, which is exactly why it's so difficult to trade in the short term and so compelling to hold over the long term. Let me give you an analogy that might help this all make sense. Imagine you have a friend who is both a firefighter and a chef. On a normal day, they're cooking incredible meals. That's their industrial side, their practical everyday value. But the moment there's a fire in the building, everyone forgets about the food and runs to this person because they're the only one who knows how to handle the crisis. Silver is that friend. In normal times, industry is the primary driver of demand, but the moment a geopolitical fire breaks out like it did this morning, silver's monetary identity takes over, and that transition between the two roles creates the exact short-term chaos we saw play out in silver's price action today. Now, let's pull back to the stock market, because this feeds directly into understanding what's happening to precious metals. The Dow Jones Industrial Average dropped almost 800 points today, a 1.61% decline. And that sounds like a lot because it is. The Dow dropping 800 points while oil is spiking and gold is at record highs is a very specific type of market signal. It's telling you that professional investors are rotating out of equities and into hard assets, selling stocks whose profit margins are about to get squeezed by higher oil costs and moving into gold, silver, and commodities that benefit from exactly the kind of supply chaos we're seeing. The volatility premium being priced into energy and safe haven assets right now is extraordinary. Supply disruption fears are expected to keep the premium baked in for the foreseeable future. And this isn't a one-session spike. This is the beginning of a repricing of risk across global markets. And here is the aha moment I promised you. The thing that ties everything together and completely reframes how you should be thinking about today's events. Most people watching the news right now are focused on the oil price. The headlines are screaming about $81 WTI and $85 Brent and Iraq cutting 1.5 million barrels per day. But the real story, the one that will matter 6 months, 12 months, 3 years from now, is what this crisis is doing to the global monetary system's credibility. When oil prices spike this hard, this fast, central banks around the world face an impossible choice. Raise interest rates to fight coming inflation and risk crashing a fragile global economy, or hold rates steady and let inflation run hot, which is essentially choosing to let the value of paper currency erode. Either path is painful, and either path is destructive to confidence in fiat money. And here's the most important insight I'll share today. Gold and silver don't care which path they choose. If rates go up and the economy weakens, fear drives precious metals higher. If rates stay low and inflation runs hot, the erosion of purchasing power drives precious metals higher. The Strait of Hormuz crisis isn't just an oil story, it is a story about the limits of what governments and central banks can actually control. And silver trading at $82 after testing nearly $86 today is saying out loud what a lot of people are only whispering, that the era of cheap, stable, fiat money confidence is under enormous structural pressure. Connect that back to where we started this video. Oil explodes, gold hits 584, silver spikes to $85, the Dow drops 800 points. These aren't separate events. They are all symptoms of the same underlying reality, that when geopolitical stress cracks the supply chains that the global economy depends on, hard assets reassert their fundamental value. Every single time, without exception, going back thousands of years of human history. So what do you actually do with all of this? I'm not a financial advisor, and nothing in this video is financial advice, but I can tell you what informed long-term precious metals investors have done historically in situations like this one. They don't panic, and they don't chase the spike. They zoom out, look at the structural picture, the inflationary pressures, the geopolitical instability, the monetary policy constraints we just talked about, and they make calm, considered decisions about their exposure to hard assets. Silver at $82 after testing $85 today is not the same silver that was sitting at $30 3 years ago. The macro backdrop has fundamentally shifted, and if the Strait of Hormuz situation escalates further, the repricing of silver's true monetary value could move faster than most people are prepared for. I want to close today by coming back to where we started. This morning the markets opened, and within hours, the world was reminded of something that every generation has to learn for itself. That the global economy is more fragile than it looks during the good times, that the supply chains we depend on run through narrow straits and contested waters, and that when fear enters the market, human beings reach for the same things they've always reached for: gold, silver, real assets with intrinsic value that no government can print away. Today was a dramatic day, but it was also in many ways a clarifying day, because the price action we saw, the oil spike, the gold record, the silver volatility, the stock sell-off, that is the market telling the truth. The truth is that the transition to a world with higher energy costs, higher geopolitical risk, and higher inflation is not a future possibility. It is a present reality. And the people who understand that, the people watching channels like this one and educating themselves, they are the ones who will be positioned correctly when the dust settles. Thank you so much for spending this time with me today. If this video gave you any clarity, any perspective, or any value whatsoever, please hit that like button because it genuinely helps this channel reach more people who need this information. If you're not subscribed yet, please do it now. We are going to have follow-up coverage as this Hormuz situation develops, and I want you to have that information the moment I put it out. Drop your thoughts in the comments below. I asked you earlier whether you think this escalates or resolves. I really want to know what you think, because our community has viewers in the Middle East, in Asia, in Europe, in the Americas, and your on-the-ground perspective is something I genuinely value. I'm Yali Jiang, this is Silver Signals. Stay informed, stay grounded, and I'll see you in the next one.